Once again, the market has failed to make a bottom signal just when the SPY, the QQQ, and many other stocks are trading around critical support points. And this is a sign that the medium-term trend is very weak and a bearish reversal is apparently imminent. This is a particularly dangerous turning point for the market, so in today's video, the last of 2024 by the way, we'll see if the market has any chance of recovering, what needs to happen for a bottom signal to appear, and of course, what to expect next if we continue to fall. This is the Finance Hydra channel where we study the market together and you get practical, objective analysis without sensationalism, without causing panic or fear in anyone, without any bias. Here we just focus on technical evidence and how to react to the data we are shown. My name is Nathan, welcome to another daily analysis. Now, as we can see here, SPY is having a very hard time near its support level around 586. We don't see any meaningful bottom signal. There is not a single bullish reaction suggesting that SPY could recover, that SPY could make a bottom signal in this area, but at least we are not losing this support level yet. So if you ask me, although the situation is very dangerous, there is still time for us to see a good, meaningful bullish reaction. However, the SPY needs to make a nearly miraculous reaction in order to avoid a sharper correction, because by losing the 586, we are going to lose a critical support level, which is the neckline of this gigantic head and shoulders chart pattern, one of the most reliable bearish reversal chart structures known in technical analysis. In this case, we could easily close this gap at 576. However, if you ask me, the technical target of this head and shoulders, which is the size of the head projected in the direction of the breakout, is around 563, which is also, by the way, the previous top level, as we can see here on the weekly chart. Multiple resistance levels in July, August, and September this year. All right, so the 563 is going to be our next major support level if we see the SPY actually triggering this head and shoulders chart pattern. Therefore, we gotta watch out, okay? Because technically, we are bearish. We are below the 21-day EMA, and we are not reacting at all. We gotta see a miraculous reaction like tomorrow, I'm so sorry, tomorrow is holiday, like this Thursday, or maybe in the next week, in order to avoid a sharper correction, in order to avoid the materialization of this head and shoulders chart pattern. All right, so we gotta be very careful. Regarding the QQQ, we are on the verge of triggering this bearish pivot point. By losing the 515, we are going to trigger a lower high, lower low, and in this case, we could trigger a long-term pullback, possibly to the $500 area, which is not only a round psychological number, right? Remember, the market has a thing for round numbers, and the 500 is a quite important support level. In addition, it is very close to the 21 weekly moving average, the 21-day EMA, which is right now pointing upwards. Therefore, this key point is going to be our next major support level. In the worst case scenario, we could retest the support line of this ascending channel, okay? And bear in mind, the QQQ is going up on the weekly chart. We are still making higher highs, higher lows. We are inside an ascending channel, and as the name suggests, we are ascending, right? We are going up. Therefore, the long-term uptrend would still be technically intact, even if we see a pullback to the support line of this ascending channel. As far as I know, any pullback to this level could be just another buying opportunity if we see a bullish reaction. All right, if we see a clear bullish reaction above this ascending channel. So far, medium term speaking, we are not reacting, we are making a quite ugly bearish reaction, and this is going to affect negatively our stocks because Nvidia could reject the bullish case over here. Nvidia was looking quite good, all right? It was looking quite promising. Yesterday we made a nice bullish candlestick over here, but today we are rejecting yesterday's candle, suggesting that yes, Nvidia could easily correct to the 130s again, and the 130s is our major support level because it is also the neckline of this weird head and shoulders chart pattern, right? This one has two shoulders, right? It is quite weird, but still, it is a quite important support area, the 130s, which is also very close to the 21 weekly moving average over here, making this entire area a double support level in two different time frames. Therefore, by losing the weekly moving average, by losing the 130 support level on the daily chart, we are going to materialize a sharper correction, possibly to the 115 again. All right, which is our next technical support level. So we gotta watch out around this critical support level, just like we gotta watch out for this critical support level on the SPY and this critical support level on the QQQ. And by the way, guys, regarding the SPY, regarding the S&P, I'm so sorry. Let's analyze the S&P index. Yes, we are still going up. We are still above the weekly moving average. However, the past couple of weeks was quite problematic, and this goes against some statistics. All right, let me share a few statistics with you guys over here. From a purely statistical point of view, the second half of December is very good. This over here is the S&P 500 half-month returns since 1950. All right, the second half of December goes up roughly almost 80% of the time. It is the best time for you to buy stocks, only from a statistical point of view, of course. But right now we are going down. Okay, so right now, if you pick like 10 years, 10 random years since 1950, 8 times in 8 years, you have a positive performance on the second half of December. All right, right now, what we are experiencing this year of 2024 is a negative performance, which makes us around the 20% when we actually go down. All right, so it is quite dramatic to see the SPY dropping that much, roughly 3% in the last half of December this year. All right, so it is quite dramatic. And of course, guys, this data, one of my clients who's part of my mentoring program gave me this information. All right, I gotta tell you. And next year, probably in February, I'm going to open another mentoring class, but I will have fewer places available, as some of the current mentees have become my permanent clients. In any case, I will bring more news next year. All right, so this is my quick message for you guys. Now, okay, we are still maintaining the long-term bullish bias. However, medium-term speaking, we could see a sharper correction ahead to our next support levels. Regarding Tesla, this one over here is losing a double support level made by the 21-day EMA, made by the 414, the previous all-time high from November 2021. What's more, we are triggering a top signal on the weekly chart. We are triggering this shooting star candlestick pattern, which from a statistical point of view is a bearish candlestick pattern, roughly 79% of the time, as far as I remember. It is a quite reliable bearish candle structure, and all of this suggests more correction ahead for Tesla. What's more, we see a lower high, lower low on the daily chart, reversing the trend, breaking the pattern of higher highs, higher lows, right? So that's quite problematic. This suggests more correction in Tesla, probably to the $358 next, all right, which is our next technical support level. I don't see any meaningful bullish reaction. If we see one, fantastic. Most likely Tesla is going to recover and seek the all-time high next. However, so far there is not a single meaningful bullish reaction on the weekly chart suggesting a bottom signal. If we see one, great, Tesla will be a buy again. And in this case, guys, it is very important for you to join our Telegram channel to participate the 5% project, because there I offer you crystal clear trading strategies in Tesla, Nvidia, SPY, QQQ, and many other stocks that are outside of most people's radars. All right, so it is going to be very good for you to join us, because there you get crystal clear signals, crystal clear trading strategies with entry point, exit points, targets, stop losses, etc. There I'm going to teach you how to trade the most important inflection points, the most important reversal candle structures, reversal chart structures, and of course to use a good risk management. And it is free to join, okay? You can join for 7 days for free, absolutely free. I'm not going to charge you, because as I always say, our philosophy is to show quality service first, and once you have seen the value of the service, it is up to you to decide whether or not to join us. We have traded hundreds of times together this year, and our track record is very impressive. Just check out our website for more details, for more information. See if you like it. All right, remember, it is free to try. There you can download my exclusive ebook on technical analysis, where I teach you the most important patterns in technical analysis. Therefore, just join our educational project. The 5% project is here for you. The link is in this video's description. All right, now AMD bearish, a possible bearish pivot point by losing the 118 117 area over here. We are still very bearish. We are still in a bear trend, making lower highs, lower lows. There is not a single higher high, higher low. There's not a single bullish reversal chart structure. But Nathan, what if AMD reacts? And what if we see AMD breaking the previous top level around 127 along with the 21-day EMA? Okay, in this case, yes, we are going to technically reverse the bearish bias. But so far, there is no technical evidence suggesting that this scenario is going to materialize. Period. Remember, my friends, trading is reactive. It is not predictive. We can't predict the future, but we can react to the data we are shown right now. Not a single bullish reaction. And by the way, if you are still watching this video and you are not a subscriber, consider subscribing, because you are watching a video on technical analysis for roughly 12-13 minutes right now. My dear friend, this channel is for you. I never ask you guys to subscribe in the beginning of the video, right? I always wait for 10-15 minutes to ask you, because only if you are really interested in learning, in understanding the technical patterns, in trading, in investing, only if you have a real interest, you are going to watch this video for more than 10 minutes, all right? Most people can't stand watching, so if you are still watching, this channel is for you, my dear friends. So again, subscribe and click the like button. Every single like means a lot. Really, it means a lot to this channel, to this small channel. So click the like button to show some support. I always appreciate your audience, your friendship, all right? Now, regarding Palantir, guys, Palantir is right now back to its congestion. We are above surprisingly, the 21-day EMA is acting as a support level for us today. All right, I was not counting on that. I was expecting that the $71 was going to be a more important support area, but here we are trying to bounce above the 21-day EMA. This is actually very good. It is a very good bullish signal. And if you ask me, in my humble opinion, only by losing the $71, we are going to technically trigger a meaningful bearish reversal, suggesting a weekly pullback on the weekly chart, possibly retesting the 21 weekly moving average, all right? So far, we are still above both support levels, so we are still in a relatively safe situation, all right? So either way, Palantir is looking quite bullish. There is no technical bearish reversal chart structure triggered yet, but let's watch the $71 very closely from here. I'm gonna keep you guys updated in this channel every single day, daily unbiased analysis for you. Join the 5% project, our educational project, if you want to learn more about trading, if you want to trade with me, if you want to take advantage of our signals, of our strategies. Just take a look at my website. The link is in this video's description. Thank you very much for your audience, my dear friends. See you guys next year. Stay safe. Bye bye.